look, my name's Les Sulgrove. I'm with Via Realtors here in Des Moines, and this is my weekly update on the real estate market and how it's being affected by the COVID-19. So, doing a little bit different tonight. We're recording on Zoom, and then we'll save the recording over to Facebook. The previous couple weeks, I've recorded over on Facebook Live, and it didn't allow me to answer some questions if we had any in the meantime. So we'll try it this way, and if it seems to work out, we'll continue this path. So let's get started. Just like I said, today is week 15, April 12th, and I started doing this about, this is my fourth week, I think, going in. And so let's just jump in here and talk a little bit, like I always start off here, let's talk a little bit about the home inventory levels. And as you can see here, every week, I just kind of want to remind you when we start this that I have a set of numbers here that's midway through March, and that's about the 1st of March when I started watching to see if coronavirus was giving us any problems in the marketplace. And as you can see, the green line here is 2020. This is the number of homes for sale on a daily count. So every week the inventory goes up and then it comes down as the week goes through. So it's kind of cyclical here, but you can kind of see we were on a pretty flat trajectory there for a while. But this past week we saw a spike in new homes coming on the market. And I don't want to say it's like a spike in new homes coming on the market, but we had a spike in our inventory levels, and kind of mirrors what we did last year. The dark green line here shows you where we were last year at this time, and we're still kind of ahead of 2019. But I think you'll see here before we're done that this is more of an indication of, well, if you've ever heard an engine that's missing a cylinder, I think that's kind of what our market's acting like. There's some sputtering going on. Inventory's up and down a little bit. And this past week, we did see inventory climb. And it wasn't necessarily, again, because we had more homes on the market. It's because we had less homes coming off the market in sale pending status. So always kind of interesting to see the cause and effect here. So let's take kind of a peek here at this. You can see here that trajectory went pretty much straight up. And just like I said, it went up that same way last year. So let's kind of zoom out here. Over here on the right, there's that graphic we were just looking at. And if we can compress that down and go back year to date here for the entire year, you can see it kind of compresses that. It really magnifies what this market is doing here. It's essentially pretty well tailing off. Now, it was a pretty decent jump this week, but still, it's just kind of an odd thing that's happening in our marketplace. We compress it out even farther here. This is all the way out, going out year to date, and not year to date, all the way back to 2009. And you can see that in 2009 we had much more inventory. I've showed this before, but I like to show it every once in a while. This is how the inventory climbs throughout the year and then falls off at the end of the year, climbs throughout the year and falls off at the end of the year. So in that respect, if you look over here at 2020, things at this far out level don't look quite so bad, although you still can kind of see that little period there where we had everything kind of compressed. And it'll be interesting to see if this is just an anomaly this week, if it comes back down, if it stays up, and we'll try to analyze that as we go as to what's causing that each week. So taking a look at pending sale counts here, this again is January through April 12th today, comparing this year, 2020, to 2019. The darker line indicates 2019, and you can kind of see, again, that our trajectory is typically pretty steady in the spring market. We see homes that are going under contract. That's what pendings mean. Daily pending counts mean that a home has had an offer accepted on it, and it goes into that in-between period where the buyer's trying to obtain financing. And that level of inventory kind of counts up as we go through the spring market. And you can see the gold or yellow line here shows that we've definitely hit a plateau, and we've kind of peaked and has kind of started coming down. So let's kind of take a look at that again, compressed out all the way to January of last year. You can see that our peak last year was around 1st of June, and we're kind of peaking early this year because of everything that's going on in the marketplace, and we're kind of coming on the way back down. What this tells me is that we're definitely seeing a change in our marketplace. And if you remember the homes for sale graphic, and I said we had that large spike of homes for sale on of inventory. What that means is that these buyers that were typically buying are not buying as fast, and when this number drops down, that is another way that home inventory levels can rise. So home inventories rise for one of two reasons. One, either we get more listings on the market, or they just aren't selling as fast. And in the case of right now, they're just not selling as fast, and that's the whole issue. We're going to talk in a minute about months of inventory too. So the in fact, let's just talk about months of inventory. This was a graphic I showed you 2 weeks ago, and again, here's that March 1st date here of when we kind of started this. The blue line is 2019 and the green line is 2020. This time it's underneath is 2020. That means that the market is actually selling quite a bit quicker in 2020. And 2 weeks ago, I was talking about whether we do this crossover where the months of inventory for 2020 start to go slower than 2019. And if that's the case, then we would see this crossover between this blue and green line. Well, last week is when we first saw that crossover. And I went out 3 decimal points just to show you just slightly longer than last week, but for all practical purposes, we were neck and neck last week with the previous year. So that's last week's, but boy, look at what happened this week. Home inventory, months of inventory actually slowed way down. We went from 2.5 months of inventory to 3 months of inventory overall. And that basically equates into 15 days longer, 15 days slower marketing. And that really is a sure sign that, hey, things have pretty well slowed down here. And, what we'll be watching over the next couple of weeks here is, does this continue to rise? If we get up to 4 months of inventory, that's my gauge of whether we're in a buyer's or a seller's or an even market. Currently, we're in a seller's market because it's less than 4 months of inventory. And again, all that means is that if no new homes come on the market in 3 months, in this case, with the numbers tonight, in 3 months, we would run out of homes for sale. If we continue to slow down and the buyers continue to not buy as quickly, they're still buying, but if they were not buying as quickly and we went up to 4 months of inventory, that would then mean that we're another 30 days slower than we are currently right now. So just some things to watch. Now, this is overall inventory. There's our category of inventory. I'll show you this next graphic here. Our category of inventory is broken down by single family resale. That's your standard detached homes that are not brand new construction. So single family resale, condominiums and townhomes resale. So existing homes, but they're condos or townhomes. We have new construction single family. That's the new builds, and that's the homes that are out there, being constructed, as well as new construction condos, townhomes. And the breakdown of this inventory is 53% of all of our inventory right now is single family resale. So not by far really, just over half of our homes that we have for sale are single family resale. Coming in second place with about 1 in 4 homes on the market right now, a little over 1 in 4 is single family new construction. And then the condominiums, both resale and townhome, are pretty well split between 10 and 11% of the remaining inventory. So what this represents on this graphic, and it looks a little confusing, but the blue bottom line here is single family resale only. Now remember, this last graphic I showed you was overall. It said 2.5 months of inventory or 3 months, whatever it was. Let's go back here. It's 3 months of inventory. And the single family resale inventory, that's your standard homes, that's the ones where most of our sales come from, is currently at just over two months of inventory. And the one up here at the top that's all over the place is new construction townhomes. There's quite a bit of that inventory out there, and they're not selling quite as fast. And what that tells us is that 11% of the inventory is going to take over a year to sell at the current pace. So, and that's pretty common in that particular category. But new construction, however, is kind of the sweet spot. Builders have a little bit better ability to control their inventory, and they might have lots that are available. So if they need to add more inventory to the market, it's easier for them than it is with single family resale. We have to find sellers who are willing to put their homes on the market, where new construction, the builders can kind of open up some lots if they have them, and they're doing a real good job of keeping that inventory at right between 4 and 6 months inventory, and that's an even market. And what that really means is that it's easier for a home buyer. Now, price-wise, it's higher, but home buyers that are looking for new construction are not having to, too much trouble finding something that they want to buy. So there's enough inventory to satisfy the buyers and not too much that the builders are sitting there with a lot of inventory. So kind of an interesting graphic I do watch, and it is important because they all four categories do go up and down. So the next graphic, we talked a little bit about this last week. This is a housing shortage overage graphic, and this is a metric that I've created that will tell us if we have a shortage of homes. For example, single family resale. Remember, we're in a pretty deep seller's market, even in the current conditions. Last week, in order to bring the single family resale inventory levels up to where we would be in an even market, that would give buyers and sellers both an even balanced chance at buying and selling homes, it would take an additional 2,100 homes for sale. What's interesting is because the market is slowing down, that has the same effect as adding new homes to the market, as we saw in that very first graphic. And this week, instead of 2,100 homes, now we're about 1,500 homes short of being in that even market. So again, we go backwards. There's last week, and then there's this week, we're at 1,500 homes. Now, we have not added 500 homes to the market, but it has had the effect of bringing that 500 homes to the market by just simply having fewer buyers out there buying. So just pretty interesting. I would say that this is a real good indicator that we can start to watch, that when this number does start to go back down, that the market is probably coming back awake, and that we've kind of maybe turned the corner. So this is one of my major graphics, or one of my key points that we're looking at. The other lines up here at the top reflect, again, the condo townhome resale, the single family, and condo new construction. And if you recall, the new construction was in between that 4 and 6 months inventory. So that just basically says, hey, we don't have to add or subtract any more homes in that category. So therefore, it's a zero number. It's just perfect. It's got the right balance to have between that 4 and 6 months of inventory. So we're not over, we're not short on those homes. So, all right, the big number that we always watch every week is the weekly open house counts. Now, this one looks really, really different this week, but keep in mind it is Easter weekend, and Easter is traditionally the weekend that we have the fewest open houses of all. So even in a normal market, we would have probably, a quarter of the number of homes open that were normally open. And the majority of those on a typical Easter would be probably new construction. You can see this week, there were only 12 homes that were owner occupied. In fact, the graph is so small there that I had to move the number over and make it black because it wouldn't show up in that area there. That 100 total homes held open this weekend represents just 3% of our inventory held open. So I think next weekend we'll be back up closer to that 250 to 300 homes open again. So that's just kind of an interesting metric there. You can see that week 12 is when everybody just kind of stopped. And I've said before, I'm not sure that we're going to see a fast rise in open houses. I think people are going to be a little more leery about getting people back into their homes on an open house basis, and really prefer to have them coming in, by appointment. So, question from Crystal: do I know, is that only physical open houses, or is that counting virtual open houses? Good question. I did look at, of the 12 resale properties that I saw open today, I did kind of flip through them, and a couple of them were listed as virtual open houses. And so we don't currently have a category to distinguish between open houses other than I can switch it to new construction or resale. But there were a couple that were open this weekend that were virtual, and maybe that's a change we'll see in our MLS system. Maybe we'll be able to start tracking virtual open houses. That's a good question, and I think that's a something that we can maybe lobby the MLS for the multiple listing service to add that category. So anyway, thanks for that question. So all right, the last graphic here we can get to it. This is the my weekly dashboard, and this dashboard, for those of you that maybe don't see this every week, or you kind of look at it and you go, there's a lot of information there. Well, that's the whole point. It's supposed to be one place where you can come every week and kind of get a great overview, take from it what you want. And I do a little narrative up here at the top. We have, as of Sunday night, which is today, as of week 15, there are currently 3,540 homes for sale. We had 45 increases and 182 price reductions this past week. Pretty normal. I wouldn't say that's a high number for price reductions. We're seeing about 150 or so price reductions every week. Across the top, again, we've got year-to-date closed sales, and there's kind of a milestone going to happen here this week, probably tomorrow. We're probably going to hit 3,000 closed transactions. This is the breakdown of that 2,900. 2,175 are resale. Condo townhomes are 320. And again, you can kind of see there the 95 down there on the condo townhome new construction is all that's really there for the new construction. And that's why that's that one graphic that was going up and down so much. To give you an idea, 2009, if we hit 3,000 tomorrow, last year it was about April 27th when we finally hit 3,000 closed sales. And if you kind of look down here in the middle bottom, you can see that this black line represents the pendings from last year. And we really started off the year ahead of last year up until about week 11. And that was our high. I've left the high on there, 321. And so that's what we're seeing as a product of these homes 4 weeks ago or 5 weeks ago have now closed or are closing. And what that's done is it's brought this number up higher. So one point of note here, each of these boxes here, single family resale, this is a weekly average. So if you recall, I said we had 2.2 months of inventory. That's actually of today, but this is the weekly average. So this will show you that over the week, we've had 2 months of inventory for the whole week. And this is a weekly average of 1,885 homes. Average or the median list price is $250. Next week, I will be really diving in and talking about home values and pricing to see if there's been any changes since the market starts to slow down. Does that mean that home prices, listing or sale prices, are going to start to go down or up? It'll just be very interesting to see that. I've been kind of watching it, but nothing's really happened up until we've started to see a couple things this week, and I want to make sure that it's a trend before I start to report on it. But I do think that we're probably going to see some changes here in our pricing starting next week. The middle of this graphic, obviously, there's your open house pie chart. Just shows you it's real easy this week. A pie chart's usually 100%, 100 opens 88, which is 88% and 12%. The bottom three graphics are a good indication of how active the market is compared to last year. So the black line on all three of these lines are an indication of what has happened each week compared to 2019, that same week. And you can see that up until about 3 weeks ago, we were ahead, but we actually have had 4 weeks dropping of inventory. And then we've had a little bit of a pickup. So our inventory has picked up some, but we're still below 2019 inventory levels. But the big one over here is the sell pendings. And this is the one that's causing our inventory to kind of rise. You can see we've actually gone 4 weeks in a row now with fewer and fewer pending sales. That means that the market is actually slowing down quite a bit. And the larger this graphic drops, the more this yellow bar chart drops, is the slower the market is. And the turnaround will be when that starts to come back up. And we'll know we've achieved that turnaround when we kind of cross back over next year. Now we'll have some numbers to make up, and this is where we'll see our spring market kind of appear again. But right now we're basically, our spring market is on hold. We still have people buying and selling homes, but it's not nearly at the pace. So, and then the far right one over here is closed sales. We do see a spike typically at the end of each month, and that's what this one bar that goes up above, that was the end of March. So a lot of homes close, but at the end of a month. And so we do see a spike at the end of each month. And it's not uncommon to see that go back down. In fact, the black line you see kind of does that. The next spike we'll see should be near the end of April here. So that's really about all I have. I mean, if you guys have any questions, I see we've got just a couple people on with us tonight, and that's great. Crystal had a great question. If Austin, if you've got a question, you can type it in the chat, or I can unmute as well. And I'll go ahead and unmute you guys. And if you have questions, you're certainly welcome to ask them. And in the meantime, if you're not already a fan of Simply Des Moines Stats on Facebook or Simply Des Moines, all the stats that I put, all the graphics, all go over on Simply Des Moines Stats. And that's all that site is. It's just a stat site. The Simply Des Moines Facebook page is more my marketing, but with all the graphics and stuff right now, I do bring that over. So, Austin, any questions for us tonight?
I don't have any. Just wanted to tag along and watch. So,
very good. Very good. Well, I appreciate that. Thanks for coming, Crystal. Thank you again for your question. And with that said, try to keep these short. We're about 20 minutes in. That's what I was kind of hoping for. So we'll go ahead and stop this tonight, and we'll see you guys next week, and we'll see what happens in the market. So